And as far as showing you this tool, I think we can find a better chart. I'm going to skip this one, and hopefully the next one, TXN, is a better example here. There we go. Nice example. All right, so TXN is, we had a reversal signal. You can see it's not a huge reversal, it had a slight pullback as it began to move to the upside. Looks like we may be forming a higher low after an extensive upward trend. We have, let me mark some levels here. Solid support down below, very nice support level, very well defined. To the top, it's not as well defined, a little bit soft. We'll go ahead and just use the very top level, though, right around 27. Nice round number, and you can see it turned right up against it back in December. So there's the range we're looking at. What we've had is this push to the upside. There's our long signal on the slight reversal. Well, it's actually been consolidating, hasn't it? Here over the last month, it's basically consolidated. So I would say what I'd want to see is a breakout. I like the chart, but I don't think it's quite ripe yet, let's say. So I want to see a breakout above the range. Let me grab the reward risk tool, and I see where I'm pointing my mouse. I'm saying, okay, if it gets above here, I can go ahead and put in a stop market order and enter at this point. And then I can drag it out, and you can see now it's at the 2-to-1 ratio that I set, and I can see, okay, well, there's my target, and there would be my loss stop. So where would you put your stop on this chart? Well, depending on the trader, you probably put it in different places. One thing you could do is use the recent consolidation in various ways. This is why a lot of people like to trade consolidations. If I'm trading the breakout, what I can do is say, well, let me put the stop in the middle of the consolidation. Why? Because if the breakout fails and it pulls back into the consolidation, what I know is that it's not a breakout trade anymore. That's okay. Nothing wrong with identifying the fact that the reason you got into the trade initially is no longer valid. It pulls back and you're keeping a very small loss at this point. Or you could go to the bottom of the consolidation. I pull it down here, get down towards the bottom of it, and that's another way you could trade it. Obviously, you're giving it more room to run. I don't think it's necessary in this type of consolidation. If we're looking for a breakout trade, right, we want to break out the consolidation, we know it's not a breakout trade pretty soon if it pulls back into the consolidation. So I think we can put it right in the middle there. Now, what we've done is said, okay, in order to try and realize a 2-to-1 reward to risk ratio, it would have to go to 26.55. So we can look at the chart to the left and say, is there anything here that might impede that from happening as far as we can tell? Well, we marked 27 as the top of our range. Just below that, though, right about 26.55, you can see I'm using the crosshairs here, very close to where that 2-to-1 level would be, we may have potential resistance there. It's hard to tell again. You know, it's a little sloppy up here. But the point is, looking at this, if either one of those are true resistance, we can still reach our target or get very close based on our analysis here with the reward to risk tool. Let's look at another example. A very similar one, so this one should be very simple to do. Let's go ahead and apply it. I click on the reward risk tool. Again, I want to see a breakout. How about 30.50 as the entry? I go into the middle of the consolidation. I'm going to mark what could be potential resistance. 32 is actually a round number. You can see the high just above that that was established right at the beginning of the year. Let's pull this down so we can see this better. How's that? There's a little better. And you can see it would have to reach 2-to-1, it would have to exceed what could possibly be resistance. That's okay. Knowing that going into the trade, we can watch it closely. If it does approach this level and exit if it begins to pull back, maybe not getting our exact 2-to-1 level, but still, it's pretty close to being close to what we're looking for out of that trade. So another example of playing this consolidation. Something else I want to point out here is that this type of consolidation will lend itself to a target. And what I mean by that is usually the measurement from the valley up to the middle of the consolidation is the distance that it will continue once it breaks to the upside. You can see this is very symmetrical. In fact, I'm going to use the reward risk tool to show you. See how that's in the middle? I go down to the bottom. There we go. Okay, again, I'm not measuring reward risk here. I'm just showing the distance from the valley to the middle. I say, okay, so if I move this up and extrapolate it, I can expect it to go up almost about where we had the reward risk profit at, just above the resistance. So that is a feasible target based on the consolidation continuation theory. All right, so a little aside there. Let's go ahead and look at a couple more here on reversals, and I want to look at a different trade. All right, here's a good example. And you may be thinking that's not the best example, but it will help illustrate the usefulness of the tool. I'm going to mark resistance. Looks like 18 was not quite the high it reached, but looks like we have resistance somewhere around the 1775 mark. You see the slight pullback and a well-defined upward trend, right? So you may look at this and say, well, this is a good long opportunity. I'll go ahead and take it. Well, let's apply our reward risk tool. Even if we got in at today's close and we used the last pivot to the downside as our loss stop, it would have to break what looks like pretty well-defined resistance in order to match our 2-to-1 reward to risk tool. Not a bad short-term trade, and if you're going to do 1-to-1, this probably meets your criteria. Let's check that real quick. I'll double-click on it. I change it to 1-to-1 ratio. I'll apply it, and there you go. So if you were going for the only better than 50% of the time you have to be right, and you're using a 1-to-1 measurement, then this does have enough clear air to the upside as long as it enters somewhere around the current close price before it runs into any major hurdles to reaching our target. All right? And as an example, let's do one on the short side, and then we'll look at a couple of trending candidates. Here is Wyndham Worldwide Corporation. Not the best example, but let's go ahead and try it anyway. Now, let's say I'm going to get in here. All I do is click and drag up to my stop, and now it's showing I can use it in either direction. So I could take a look and say, well, are there any major hurdles that may have to clear to reach my 2-to-1? Did you see how I placed that? It's getting in at today's close. I went back to the last pivot it created to the upside at 25.32. That's my loss stop. So to reach a 2-to-1 reward risk ratio, 21.42 would be my profit target. Now, if I take a look at the chart to the left, there's nothing major over there. There's a little bit of potential. Here we had a pivot. This could be a fulcrum level forming, right? Resistance turning to support, and over here we may have potential support, but still not a bad trade. But the only thing I'd say on this chart is this is trending upward very nicely. So this is a bit of a risky trade. You're fighting against a very well-defined trend here, so probably not the best trade, but a good example of applying the reward to risk tool to a short position. Okay, and I realize I'm running out of time. Let's switch over and look at how you would handle a trending situation. So now I've switched to the trending strategy, and here are the signals fired by that strategy. I'll click on the first one, MUR, and not the best upward trend. It is trending upward over the last couple of months, but not a huge upward trend. But we see here we have a signal. We had a trend start, and there's a little bit of a push through the top, so not a bad signal here. So I can go ahead and apply my reward risk tool to see whether or not this trade would work for me. Now this is almost similar to the reversal one. I'll go ahead and put my entry here. Now where would I put my loss stop on this one? And this is where it gets a little bit trickier with the trending. You can come all the way back down to the last pivot, but look at the move it needs to make to meet your 2-to-1 ratio. If you want to shorten that up and say, okay, well maybe I could use a percentage or an ATR value to help figure that out, you could do that. Looks like we had a pivot back here, so maybe about halfway. At this point, it's been trending upward, so about halfway from here to there. We'll go ahead and use that as our loss stop, just as an example. You can see at 2-to-1, then it needs to reach 59.54. That's about a 10% gain from where it's currently at. Nice trade if you can get it. Is there anything to stop it from getting there? Doesn't look like a whole lot, other than the fact it's not really in a major upward trend. If the signal had occurred over here, I'd feel a lot better about it. It looks like longer term, what we would do is play a short-term long trade, because the pullback here is looking like a downward trend, and this is simply a fluctuation in that trend. So again, not a major hurdle to clear, but looks like a bit of a downward trend, a little risky to me. One more example for trending. I want to find a specific one here. Okay. Now, here's a common one. You look at this and say, wow, okay, well, it broke through the highs it's established here recently, and it's moving up strongly. If I wanted to analyze this trend,